Hi, this is George. In this video, we are going to see about double spread bank nifty part 2 advanced version. So part 1 has been already released and the link is shared below. If you want, you can go to the details on that where I'll be explaining the strategy. And in this, mostly I'll be explaining on the P&L of how it has worked for the last 1 year, in which already we have seen for the first 3 quarters, that is for 2022 to 2023, from April to December, we have already seen the results. Now I'm going to see the Q4 results, and with that you can see overall what is the profit that this strategy has made. So this strategy is actually very limited risk. Before getting this video, please do subscribe this channel if you are new to this channel, and please do like this video if you genuinely like it. So this strategy is a limited risk strategy because it's a hedging strategy, so you would be like kind of protected both the sides. So it's a very limited risk only. As it is hedged, the capital required is also less. Only 60,000 is required. And as I said, we are going to do spread both the sides, which means we'll be like covering as well. So manual back testing has been done for the last entire whole year for in Banknifty weekly options. Again, here I like most of my videos, like this is again a no adjustment strategy. So it is very much suitable for working professionals and part-time traders. Disclaimer, it's only for education purpose. Please do your research before taking any trade. This is not a recommendation, but just my view. So entry. So in this strategy, just like every other video, we are going to enter on previous week Thursday at 9:30 a.m. and we'll be exiting on the expiry day at 9:30 a.m. for the current week expiry. So say suppose I'll explain the strategy here. In this, we are going to buy one lot of OTM call and put 500 points away from ATM, and we'll be selling one lot of OTM call and put 800 points away from ATM. So this way we are going to buy 500 points away and sell 800 points away. So maximum loss is 300 points is the maximum thing that we can lose. Other than that, we are like protected in both sides. So say suppose if bank nifty is at 38,000, we buy like one lot of 38,500 call and 37,500 put, which is like 500 points away from 38,000, and we'll be selling one lot of 38,800 call and 37,200 put, which is again 800 points away from the ATM. So this is kind of the table that shows how every month has performed in terms of profit and loss and return on investment. As I said previously, like in the previous video of part 1, I have already given like for the 9 months what was the profit and loss. So in the last 3 months, we can see like January was not a good month, and we have ended with 11% in the negative scale, whereas February and March were good with 13 and 12% respectively profit. So overall for the year, this strategy has given us 33% return on investment. Last video, I think it has given 0% or 1% return on investment. I don't remember, but this strategy is very good in terms of for the last year. Every strategy has its own good month and bad month, good year and bad year. And this strategy has performed well for the last year. 33% is good enough for me at least. So it's up to you to follow or not. Totally. So as I said, like these are like no adjustment strategy. So we need to know like if you are just executing the strategy and sitting tight, how far your P&L might touch like loss. If it is going in the upside, like if you're in profit side, you might be like relaxed always. But if it is on the negative side also, like what is the maximum loss it has reached for this strategy in the last 3 months, that we can see, so that you will get an idea on like how this has performed. So you can see like from these, out of the 4 weeks, 2 weeks were in loss actually, this gray one and blue one, and that we can see the scale of maximum of 4,000, and that we are going to exit in the Thursday morning. Somewhere around here we'll be exiting. So this blue line also maximum of 2,000 loss is the maximum that you see, and here also 3,000 is the maximum you'll see, not 4,000 in both the weeks. So 3,000 is the maximum loss, as I have mentioned here. Other weeks were like even 1 week of this 25th Jan. Okay, this is again our last weekly week. So other than that, we were in profit only. This again was like, as I said, like January is the worst week. Out of 4 weeks, 3 were in loss and only 1 was in profit. And max loss again was like maximum 3,000 only, not more than that. February month was a very good month. Out of the 4 weeks, only 1 week was lost. That one, if you're like exiting in Thursday morning, it is like only 1,200. Max loss was like around 2,500. Anyway, we don't see till the last of Thursday EOD. And other 3 weeks were in very good profit. Even we went like almost 4,000 profit in 1 week. Another 2 weeks were around 3,000 and 2,000 respectively. So February was a very good week with 13% ROI, and same with March. You can see like out of 5 weeks, only 1 week was loss-making week. This light blue line, 29th March, which has like ended in almost 3,000 loss. Here there was no Thursday because the expiry was a holiday, so it has expired on a Wednesday, 29th March. 30, after 23 it should be 30, but you can see it's 29th March. You can check the calendar, like 30 was a trading holiday, so on 29th March it has expired. We lost around 3,200, but rest of all the cases we have made profit, which overall 12% profit for the month. So this strategy, I said, like as it is a fully hedged strategy and 500 points away we are buying and 800 points away we are selling. The strategy works well when the market is kind of moving either side with a very big range, more than 800, 500, 600 points if it moves. The one that you bought will gain premium, and anyway the one that you sold, it might go to zero if it has not moved 800 points from ATM, but still if it has moved more than 800, even that also might grow, but still the 500 points away that you bought is also going to gain premium. So you are going to end in profit only. So whenever there is a wild move, you are going to make money in this strategy. So if it is a very range bound view of market didn't move, then you might be ending in loss. So I will be like, I have given all the weeks how the graph on like how your P&L would have moved as per index movement and VIX movement. I might not be explaining all the graphs one by one, but overall you can see like how the graph has moved as and with the profit and loss for your holding of a per one lot. So here you see like it is kind of almost correlated with your P&L index and the P&L. This was not correlation, but still you can see like here you have ended in profit, and market was little, it has moved away like from 43,000 it has come to maybe 42,000, because of which you have ended in little profit maybe. And these 2 weeks you are in loss. You can see market was like 42,000 to almost 42,200 to 42,400, which is hardly any more. And similarly, this case you can see 42,500 to maybe 42,000 or 42, somewhere around that 41,800 maybe, but which is not a very big move. So you are ending in loss. And other than that, if you see like whenever there is a very big move, 42,500 to 40,000, 39,000, you are profit. So that is how things are. Like here again, 40,500 or 40,000 to 41,500. These are the cases I said like market is giving a very good profit. So I'm just giving 1 or 2 seconds for each graph for you to read and understand the graph if you want, or else maybe we can continue and go for the some key takeaway from the week of the strategy. So you can pause and read the chart if you like to. I'm just giving some time if you're interested in reading it. Okay, so key takeaway from the strategies, like in many cases, as we are observing other two strategies that I observed as well, exiting on a Tuesday is like a safer bet than Thursday. Maybe if you're exiting on a Thursday, you might get little more profit, maybe 500 or 1,000, but losses also at times can be huge if you can again scroll back and see the video. So many of the cases, if you are like exiting on a Tuesday either in the morning or EOD, you can almost like not lose much, and you might not like opportunity cost also might not have gone lost much. So I feel it is a safer bet, so that we can find some other strategy to trade between Tuesday to Thursday, so that we will cover later. But for now, this is something that is advisable or suggested that we can do. And as I said before, when market is range bound, then we lose, and if it is there is a very big move in either side, then we win. So these are the winning and losing scenario, best case scenario, worst case scenario. So 16th March is when market fell more than 2,500 points and VIX has increased tremendously, which is a best case scenario where we made around 4,500 profit if I'm not wrong. And 9th February is something where market was like slowly moving up and it's not moved any direction so much bigger, or it was little range bound only. And VIX also has declined from 16 to 13, and this is a worst case scenario where we lost around 3,500. So if you see the last two videos that I have posted, in those two, these were like kind of reversed. 9th February was the best case scenario and 16th March was the worst case scenario. So from that we can understand like we need to kind of merge these two strategies and find a way so that any of the weeks will be ending in a profit only. Maybe this strategy 2 lots we need to do, and that strategy 1 lot we need to do, because capital on that strategy is more. So we need to find some ideal scenarios where no matter what, you might have some profit, whatever or wherever the market goes. Maybe for a year it may be 20% or 25%. It might be less or so, but still 25% is, in my view, it is never less return on investment. So it's totally up to you to decide on which strategy that you want to use and what is your risk appetite, and you can go forward and use it. So thank you. See you in the next video.